How to invest in the stock market for beginners. Have you ever tried to question yourself about the lives of Elon Musk and some of the richest men in the world, how they all started leveraging the stock market? We will be discussing the starting point to your thoughts with this topic, how to invest in the stock market for beginners. So stay tuned and enjoy watching. To invest in the stock market is a wonderful method to gain money by leveraging the growth of companies. Starting up in the stock market might be difficult for many beginners regardless of the potential lengthy benefits. But you can consider purchasing stock in just a couple of minutes. So now the question is, do you think you can become one of the greatest investors? If you're a complete novice when it comes to stock investing, it might be difficult to know where to start or even how to begin. The more you understand about investing in the stock market as an investor, the further you discover there is even much more to it. Even the most seasoned and prosperous investors started as learners. Let's take an instance. Assume you have $300 saved up and you're set to go into the investment world. Or perhaps you only have $10 extra each week and want to start investing. In this video, we'll guide you through a process of becoming one of the greatest investors and explain how to enhance your profits while reducing your expenditures in the stock market as a beginner. But before we begin, let's try to understand how investment works. What exactly is the word investing? When you choose to invest your money, you are putting it into a mechanism with the intention of obtaining a return later on. When you choose to invest your money, you anticipate that perhaps the money you put into an investment will increase at some time. In most circumstances, you anticipate having minimal engagement once you've invested properly. Although the stock market is what most people think of when they think of investing, there are many more options. You might, for example, make investments in real estate or set up a business of your own. Whatever you want to do to invest in, you want to make a profit on it in the future. Why is it important to invest? Investing is a method of growing your money for the future. Investing, on the other hand, is not the same as merely conserving money. The magic of multiplying is a plus if done, that is, reinvesting your profits over time. You will benefit from the multiplicative effects, which is also called compound effects. Let's give a quick breakdown of what's been said. Compounding is the practice of increasing the benefit over time by reinvesting your investment profits gotten from the first investment. If you are just beginning your quest to generate money, investment can help you achieve your long-term targeted goals. Instead of exchanging your time for money to accumulate riches, you may have your money work for you. When you begin to make money through your investments, you will no longer be fully reliant upon your own job or savings. When do you think is the best time to start investing? Before we go into the business of today on investment for beginners, consider when you'll begin investing. However, there are several issues you need to address before you begin investing. Let's examine some of them. Number 1, after you have paid off all your debts. For beginners, the general thing to know about investing is to pay off debt. If you have any debt that is consuming your funds every day or every month, you should concentrate on settling every debt. After embarking on the task, you'll be able to invest more freely when you've paid off your debt. 2. You should keep the emergency fund syndrome in your mind. It's not a pleasant feeling to be one salary back from the sides. An emergency fund might provide you more economic free space in your life. You should consider saving for an emergency fund before you begin investing. So you'd want to start investing in the stock market. This is how to invest in the stock market and the foundations of starting up in the stock market if you're new to investing. Select how you wish to invest. Create an investing account. Decide what you want to invest in. And lastly, buy. Number 1, select how you wish to invest. When it comes to investing, you now have various alternatives, so you can truly tailor your investment style to your expertise and how much time and energy you want to devote to it. You can invest for as much or as little time as you desire, but the best method to look into when investing in the stock market is the do-it-yourself approach. 2. Creating an investment account. So, what type of account do you wish to open? Here are some different options. If you want an expert to extra manage your investment, a human financial planner may assist you in creating a stock portfolio as well as other capital measures such as budgeting for college fees. A human advisor would normally charge you roughly 1% of your assets every year with a hefty investment level. One significant advantage, a qualified human advisor can assist you in sticking to your financial strategy. An intelligent virtual may create a stock profile that is appropriate for your timescale and risk level. They're usually less expensive than human advisors, generally a fourth of the price or less. Furthermore, several provide planning services to assist you to optimize your assets. The Bankrate evaluation of the top intelligent advisor might assist you in choosing the best intelligent advisor for your requirements. If you want to best control your own investment money, a broker that works online allows you to purchase stock as well as a variety of other products, such as bonds, exchange-traded funds or ETFs, mutual funds, choices, and therefore more. The greatest brokers provide no-fee stock commissions as well as a wealth of education and research at no extra cost, allowing you to swiftly improve your game. Bankrate's assessment of the top brokers for beginners might assist you in choosing the appropriate one for your requirements, and they also offer in-depth ratings of the top online brokers, allowing customers to pick a broker that suits their main requirements. 3. Decide what you want to invest in, then buy. The next big step is deciding what you want to engage in with respect to investment. This stage might be difficult for many newcomers, but whether you've chosen an intelligent advisor or a human advisor, it should be simple. Using an expert for the job? You won't have to determine what to invest in if you choose a person or a robo-advisor. That's part of the value that these services provide. When you open a robo-advisor, for example, you'll often be asked questions about your risk tolerance and when you need your money. The intelligent advisor will then design your profile and choose which funds to invest in. Simply deposit funds into the account and the robo-advisor will construct your portfolio. Usage of a broker. If you use a stockbroker, you must choose each investment plan and make investment choices. Among many other assets, you may invest in one-person stock or stock ETFs. The top brokers provide unlimited information and a wealth of materials to help newcomers with this procedure. When controlling your own account, you can choose whether to invest actively or passively. The main distinction between the two is that you choose how long you wish to invest for. Passive investors tend to think in terms of the long term, whereas active investors tend to trade more regularly. According to research, passive investors outperform active investors. 4. Determine the amount you can invest, then buy. The secret to getting rich is to deposit money into the account over time and allow compounding to perform its wonders. That implies you must allocate funds for investing on a monthly or weekly basis. The great news is that getting started is quite simple. How much money should you put aside? The amount you invest is totally dependent on your costs and time period. While you may invest what you can easily afford, experts suggest that you put some amount of money invested for 3 years, preferably 5 or more, to allow for price fluctuations. The beautiful thing about investing nowadays is that you can do it on your own rules, even if you have less knowledge about it at first. You may do it yourself or hire a professional to do it for you. You can invest in stocks or stock funds, as well as trade actively or passively. Choose the investment approach that works best for you and start building your money. This is the end of the video. We really hope you enjoyed it. Leave your thoughts in the comments area below, and don't forget to smash that subscribe button and press the bell button to see more of this interesting type of content. Thanks for listening.